In this video, I want to talk about a trade setup that I see often, and I want to become more familiar with it, and I want to become better at trading it. So what happened was price was moving up here, and it's coming and it's put in this highest high. And then it moved down, and it found some support right here. That support um, made sense because there was some support around here as well. And in this region here, it was a previous area of resistance, which is now broken, that gave this highest high. And it's a good area for support. And one would think that this support should move you back up to the highest high and maybe even beyond. It didn't do that, and instead, price came back into the support area. And again, one would think that it would go above this level that it recently went to right here and beyond. It didn't do that again, and instead came and broke through this support and put in a new level and found a new level of support once and again twice, a second time. This support level that it found was from this earlier beginning of the move up. So for the support level, one would think that price would come and find the support level, and if this support level should propel it up to at least the highest high level. But before it could do that, it would need to break this support level, which is now turned resistance. And um, it didn't do that. Seeing that this highest high has been in place, and all price did was come in here and put in a lower high, break the support, I should now be thinking that this area here would be, if seeing that this support level has been broken and come in and put in a new support level, if price came back to the support level, this would be an ideal place to take a, not an ideal, but a low risk, high probability area to take a short trade off of this support turn resistance. The stops would go above this resistance, and targets would be right back down for about a 1-to-1 ratio. And that's exactly what price did, and it went even a little further and put in a new support level once, twice. That support level moved price back up into the resistance area, and again Same thing, would have been a nice trade to take with stops above, this time 10 pips, 10 to 12 pips plus the spread, and target back down for 20 pip gain, and that's exactly what it did, and a little bit more, and it put in a new lower low. That lower low moved price back into the resistance level, and again, it would have been a nice trade to take with resistance level being here. Take a short, stops would go above it again at 10 pips, and you target back down. First target would be 15 to this interim support. This is a 15-minute chart, so I just want to mention this is interim support. The bigger support would be down here, and then target back down to there, which would be about 26 pips. That would be the ideal way to trade this chart now that things have unfolded. But what did I actually do? When price was live yesterday, I saw all of this happen. I wasn't at the computer during this here, but this would have been an ideal place to take a short trade, and perhaps going into the future, if I could learn this properly, I could put a limit order there, put my stops up here, and be away from the computer, and one of two things will happen. I'd get into the trade and I'd get stopped out, or I'd get into the trade and I'd hit my limits. So once this happened in the morning, and then I was at the computer 9-10 o'clock, and so I saw this 10 a.m. bar break right down and put in a new lower low. And so I said, if price can get back into the 21 EMA region, into this area here, which lined up with this interim support, which now got broken by putting in a new lower low and closed below, I thought price was going to come further down. So I took a trade and I had my stops above this level, this identified resistance level here. In fact, I had drawn in a 618, take it right down to that, clear, I'll just put on the 618. And I had my stop just above the 618 and a little bit above the blue box, because I had new data. I had put in a new lower low and it closed below, and I said if this price gets all the way back up to the 618, it's not going to hold. It is above a resistance level. That says 618 would not be a good place to still be in the trade. So I go, that's my stop. I said, if that's my stop, where will my limits? If that's a 17 pip stop, where would be an ideal 20 pip stop with the spread? Where would be a potential target area? Well, before I just looked at structure and looked at the support and resistance level, and this move started here. And you could even go a little bit further down. I do want to keep that separate like that, because there's this, move up, come back, put in a higher low. So I said my targets would be inside of this region here. And then I also drew in a fib expansion down to the new level that was there and right back up. Adjust that accordingly. So this is what I had. This is the information I had when I drew it. And so my target was down into the blue box. I knew I'd be at the computer throughout the day, um, and so I would adjust if price got down there. So my stops was above the 618, and my target was in the blue box, and I was feeling really good until this happened and price moved against me. Price moved against me and put in a high here, came down, found support once and a second time, and I started to get worried. My stops remained above the 618, and I had a very good look at where stops. I think I had my stops right. I had it as a number, but then I adjusted it, and I had it adjusted to above this release point right there, the 618. Make that more visible. The 618 was right there, and I was above it. So my stop was above that, on that red line, right at 103.44. Now I didn't see this because I wasn't at the computer, but my levels were set. I did see this before I went to bed, and I thought, man, if this holds, then it's going up there, and I'm probably gonna get stopped out. But when I did get to the computer around 7 o'clock or so, I saw this channel had been violated. So price had a good look at my stop. It come up into this resistance area, and I said if this resistance level is gonna hold after I saw this channel get broken, and my stop still remained there. And then price came down. So now I'm thinking if price gets into this level for a third time, will this hold? And then see price just come right back up and take off and stop me out. When I went to bed last night and I left this alone, one of the things I was holding on to was that this area here had come in and put in a new lower low, and it happened during that 10 o'clock trading hour, which is a significant time, 10 o'clock a.m. Eastern. And the fact that this came in and put in a new lower low suggested to me that perhaps this resistance area is going to be stronger, and that's why I felt comfortable leaving my stop where it was overnight. I go, if price gets up to hits my stop, then I'm going to be wrong, and I don't want to continue to be in this trade. And I had to remind myself of that this morning as price came into this area here. I said, okay, don't get out of the trade, take a small loss, or get out for break even. Hold on to this. This might be a winner because it came up to resistance and it held. This resistance is stronger because of this newer support level that was put in here. This is the interim level, and it's not as significant as the higher, bigger move time frame here area here. So now that I had additional information and I saw that this resistance level is going to hold, I saw this channel get broken. I thought, what else can I do to suggest where it might terminate? So now that I had this additional information, originally I had a fib expansion going from here down to here and back up. I can now do another one from this high down and then back up. And now I'm getting a cluster of fib expansion levels, which is aligning with my earlier identified support level. And so what happened was when I took the trade here, I actually had one lot on this trade, and this particular one I had 4 lots. Now I got out of this one here for 5.4 gain because I had just set a level there which lined up with this support area right here, and I said if I get to that level, get out of that trade because I actually took on too many lots. It was 2 executed trade, one for 1 lot and the other for 4 lots. And now that I had seen this resistance level hold several times, I see this channel get broken. I see the 10 o'clock hour looks like it's going to be directional. If people are taking short trades here, here, and here, where would they be targeting? They would be targeting back down here, which also aligned with some fib expansions. So then I dropped down to, I was looking at the 5-minute charts to watch it, but I'm going to show it here on the 1-minute chart. So there's the one lot that I got out of 5.4. That was the fifth lot that I took. The earlier 4, I got out of them as price came into these fib expansion regions. I just started to close manually the lots. So when price came down here and it moved back up, I got rid of 1. I'm targeting into the blue box. Then I saw this type of behavior here below the 21. I go, you know what, I might get a double bottom here. And then when I did that, I got rid of 1 more lot here. And then it came into this. I was hoping it would hit this fib expansion level here. It didn't, and as it came back up, I got out. And the last one, I just moved the stop all the way down, and that hit the stop, the positive stop. So I got out of the 4 lots for 20 pips, 24.4 pips, 23.2, and 21.8. And this one here that I should not have been in, I was fortunate to get out. I got 5.4. So to review, what I want to take away from this is trade the levels, not the individual bars. If I had traded these individual bars, I probably would have been out of the trade. I would have taken a loss. But I know that price is not going to take off and go up until it could come and break this resistance level. Price is going to continue down if it keeps making lower low. So it had lower low here, lower low here, lower low here, lower low here. Now this is a significant lower low because it happened during the 10 o'clock hour. Made this resistance a higher probability that it would hold. When price put in this higher high here, you look for areas to get in. I'm thinking long trades, and I'm looking for areas to get in long. So it would be price comes in here and here. But where does it go to? It doesn't get up to the highest high. So now it comes and it breaks it and starts putting in lower lows, and it comes back into this support, which is now turned resistance. And so instead of thinking long trades, I start looking for short trades. Now that it's come back into the beginning of this impulse move here, if it gets down into this region, in this higher 618 from this expansion right here, then maybe down here I could start thinking to take long trades if it gets further down. But if it comes and it breaks below this, then I'm still thinking short trades. But I shouldn't be taking any short trades inside of these blue boxes. Short trades would come inside of this blue box. Inside of here, I look for patterns. I look for things that would suggest taking long trades because I'm at a significant support level. And any kind of long trades in here, stops would have to go on the other side of this low. So something like that. No, wrong. 16, target back up here, better than 1-to-1. But that's what may happen, and this video is just to review what has happened, and this pattern, this behavior repeats itself. I need to be patient, I need to be focused, and I need to be disciplined. What does that mean? It means see that this was support and now it gets broken, it puts in a new low. It comes back up, that support becomes resistance. Get in, target back down to the bottom. See the price came below that, put in a new low. Rallies back up to the resistance, get in, short, target back down here, see that it's put in a new lower low. Rallies back up, get in, target back down to the bottom, see that it came there and went even further. It found support at a previous area of support. This is the way I need to trade. I could have been wrong, and I would have been stopped out for about a 15 pip gain. But if I was right, I get 15 pips. So that's not a bad ratio. It's 1-to-1. Better than 1-to-1 is better results. And similar to how I got out of these trades here, I could have done that here and get the additional pips. But the point is look for the levels, trade the levels, not the individual bars. Price is not going to take off and go up until it breaks this resistance. Price is not going to continue further down until it breaks this support. One last note, it's easy to sit here and do a 25-minute video on all of this behavior of price, but all of this behavior occurred over 3 days, 72 hours, over 220 15-minute bars. And so that's where the patience and the focus and the discipline comes in, is not the individual bars, but the levels. Wait for price to get to the level and see how it behaves at that level. If the level holds, then you're going to make money. If the level doesn't hold, you're going to get stopped out. So when I see price coming down, break the support, I target back, break the support, come down here, get back here, I get into this short trade and I target back down, stops goes on the other side. Over here, see the support, get in, go long, target back up here, see that it can't do that, come back down for a double bottom, you're getting out for break even. Because once you get this much into the trade and you recognize this is the highest high, then it should continue its way, it shouldn't come back. Just like it never got above this red line, it means that it's continuing its way down. If it gets above this red line, then it's going to continue its way up. Leave it at that.